You know all those headlines, S&P 500 this, Dow Jones that, but what if I told you there's a whole other part of the market, one that might actually give us a clearer signal about the real health of the US economy? Yeah, let's dive into that. I mean, think about it for a second. The biggest names in the S&P 500, they're global giants, right? Their success is tangled up with what's happening in Europe, in Asia, all over the world. But there's another group of companies out there, and they give us a much more direct, kind of unfiltered look at what's really happening right here in our own backyard. And that's exactly why so many savvy investors and traders, well, they kind of look right past those big, famous indexes. They're watching something else entirely to get a real-time feel for where the economy is actually headed.
What are they watching? Small cap funds. Yep, you heard that right. Funds that track the smaller companies. See, a lot of people in the know feel these are a way better representation of the actual US stock market, and by extension, the domestic economy itself.
Okay, so what in the world are we talking about here? Let's break it down. What exactly is a small cap fund?
It's actually pretty straightforward. A small cap index fund is just, well, it's an investment fund that tracks companies with a small market capitalization. And all market cap means is the total value of all their shares of stock. So, don't think of the huge household mega brands. Think of the smaller, often younger companies, the ones that are really the backbone of our economy. And there are a bunch of popular ones out there. You can see a few of the big ones here. But the one to really know, the one you'll hear about most is IWM. That's the one that tracks the Russell 2000 index, and it's the one so many pros keep a really close eye on as a key economic indicator.
So, why all the focus on these smaller guys? What's the big deal? Well, it's because they act like this incredibly sensitive barometer for the whole economy. They feel the shifts in economic pressure long before the bigger, more insulated companies even notice a breeze.
And look, this isn't just some fringe theory. It's a really widely held view among financial experts. I mean, the source material says it flat out. Small caps are considered a leading indicator. What does that mean? It means their performance can often tell you where the broader economy is going, not just report on where it's already been. It's like a sneak peek.
And this really gets to the heart of how traders use that predictive power. When they're feeling good about the economy, feeling optimistic about growth, they pile into small caps, hoping to ride that wave up. But the moment they start to worry, the second they sniff a slowdown, small caps are the very first things they start to sell. They really are the canary in the economic coal mine. So why are they so sensitive? What makes them react so fast? Well, unlike those massive corporations, these smaller firms are just way more exposed to the ups and downs of the economy. They have smaller balance sheets, which basically means they've got less cash on hand to ride out the tough times. So when things start to shift, they feel it, and they feel it almost immediately.
All right, now let's get to what might be the single most important piece of this whole puzzle. It's all about where these companies actually make their money. And this right here is the key to understanding why they're such a powerful indicator for the US economy.
Take a look at this number, 90%. That's huge. That's the percentage of revenue that small cap companies, on average, generate right here at home, in the domestic market. Their success is almost completely tied to the American consumer and the American economy, period.
And this chart just makes that contrast crystal clear. On one side, you've got the small caps, overwhelmingly domestic, right? But then you look at the large cap S&P 500 companies, and wow, more than half of their money comes from outside the US. They're playing on a global stage. Small caps, they're playing right here in the home field. So here's the bottom line. When you see small cap funds doing better than the big large cap funds, that's a really powerful signal. It strongly suggests that the US domestic economy is strong and healthy, no matter what kind of chaos might be happening in the rest of the world. Okay, so what's the big takeaway here? How can you actually use this information? Let's boil it all down to what really matters for you.
Really, small cap funds play two key roles for any savvy investor, or just, anyone paying attention. First, sure, they can be a great tool for diversifying your portfolio. But second, and I think this is way more interesting, they're a powerful leading indicator of our economic health here at home. They can give you a heads up on everything from the job market to how businesses are doing right in your own town. So the next time you hear a market report, try to look past the usual big-name headlines. Ask yourself, what's the story the small caps are telling? Now that you're in on their secret, that they're the economy's true barometer, what signs will you be watching for?